In the past few days, Bitcoin has seen significant price fluctuations, largely influenced by news concerning AI development. Headlines such as Nvidia's stock plunge, impacting AI dreams, and the emergence of a new AI app causing market jitters have played crucial roles in Bitcoin's recent price drops. The fear of a potential financial crisis fueled by the sudden spike in fear around AI development further fueled the sell-off, impacting tech stocks and cryptocurrencies alike. Let's now turn our attention to the chart to better understand the price action. The overall sentiment surrounding Bitcoin seems somewhat bearish in the short term, primarily due to the market's volatility and negative news impacting investor confidence. However, some believe the long-term outlook remains bullish, based on Bitcoin's underlying technology and growing adoption. This makes it an interesting case study, as we see multiple competing narratives influencing the market. Looking at the one-day chart, we notice a recent decline in price, aligning with the negative market sentiment caused by AI-related news. However, the price action prior to this period shows a sustained upward trend and robust momentum, suggesting a longer-term bullish potential. The 26,000 range appears to act as a robust support level in this period, as Bitcoin repeatedly bounced from this price. The volume spikes during sharp price movements emphasize the importance of these price levels. The 35,000 range shows itself as a resistance level, repeatedly causing prices to fall in this period. Let's delve into a shorter time frame to examine some key reversals and identify potential short-term opportunities. Switching to the 1-hour chart, we can see a series of smaller-scale price fluctuations. These are short-term movements superimposed on the larger daily trend. The volume remains a key metric to monitor, as substantial volume surges can indicate a major trend change, but they're not present here. At times, we see instances where support and resistance levels are present, only to be broken, which highlights the importance of considering both macro and micro trends. Examining the 15-minute chart reveals even more granular price fluctuations. These smaller candle movements are hard to predict, making short-term scalping a very risky move. However, we can still use indicators like price action to identify potential short-term support and resistance points, which may be valuable for traders operating on very short time frames. We should focus on identifying reliable support and resistance levels on the 1-day or 1-hour charts instead, for more reliable signals. Let's recap the key price levels observed across all three charts. The 26,000 range has exhibited strong support in the daily chart over recent weeks, while the 35,000 range has acted as substantial resistance, although this resistance is weakening as time goes on. On the hourly and 15-minute charts, we found several smaller support and resistance points, but these were transient and less reliable. The most crucial metric to consider is the overall market sentiment. Predicting the future price with certainty is impossible. However, if the broader market sentiment shifts from risk-off to risk-on, with positive AI news emerging and investor confidence recovering, the likelihood of exceeding the 35,000 resistance increases significantly. Conversely, further negative news about AI technology or a general decline in tech markets would likely reinforce short-term bearishness and lead to a drop below the 26,000 support.